Thank you for your interest in Praemium. I'm just going to give a quick run through of the company and the latest progress that we've been making. My name's Anthony Wamstaker and I'm the CEO of Praemium. At Praemium, we acknowledge the traditional custodians of country and pay our respect to their elders past and present. I draw your attention to the disclaimer that this material is current as at today, the 13th of March. I won't read through the whole disclaimer, but it's up there for you to see. What I'm going to cover today is just some highlights about our recent half-yearly presentation, a bit of a description about how our product is seen in the market as researched independently by Investment Trends, talk about our strategy, then cover off our financial position and results, and then finish with a bit of an outlook about where the business is going and how we intend to take advantage of the opportunities in front of us. So if I just cover off the highlights as we have announced to the market recently, in the last half year, we had strong revenue growth, up 32%, and a very large chunk of that flowing through to the bottom line, where the EBITDA was up 43%. We are a business that when we've got investment opportunities, we take advantage of those, and we've had a number of opportunities recently, including building out our platform with the launch of a new product called Spectrum, and also making an acquisition of a complementary business in OneView. But when we don't have an immediate need for the capital, we have got a good track record of returning capital to shareholders, and over the last half year, we returned $7.5 million to shareholders in the form of a buyback and a fully franked dividend. If I go to Investment Trends is the most highly regarded independent survey of the investment platforms that are on offer in Australia. And the top three platforms all do very well on that survey, and we're in that top three. We actually come number one in two key categories, best in reporting and best in data integration and security. We were also, under those main categories, there's 18 subcategories that we were also number one in. The important thing about the survey is it surveys all the platforms that are on offer, as I said, but the categories that we win in are the categories that are of most relevance to the high net worth advisors that we serve. So whilst we'll probably never win the overall rating or come number one, because that's not our aspiration. Our aspiration is to come number one in the things that are important to high net worth advisors. A lot of the categories are really relevant for retail advice groups, and that's not our target market. In terms of our strategy, we cover these 5 areas. Our strategy covers what we're trying to do on the product, which is a little bit about keeping our product at the forefront and continuing to do well for the high net worth advisors. We always look to improve the way we operate the business or our operational performance. Customer service is very important for us. It is for all businesses, of course, but that's a key focus of what we're doing. A big part of the wealth management market is, of course, superannuation, which is growing very strongly in Australia. So that grabs a lot of our attention. And then we're always on the lookout for accretive M&A activity. And so they're the 5 areas. Some of the highlights within those 5 areas recently was, as I say, the launch of our new product called Spectrum, which finally brings together all the capability that Praemium can offer the high net worth advisor into a single product, which allows advisors to fully report and give a single view of wealth for their high net worth advisors, no matter how broadly spread their wealth is, which is a characteristic of high net worth clients. They typically have a very broad spread of operations. The other thing to just draw out, rather than go through every one of these initiatives, but the other thing to draw out is that, as I said, we made an acquisition of OneView over the last year, and the implementation of OneView into the Praemium world is proceeding on track. There's still a number of opportunities in front of us, which we continue to monitor, that might see us expand our business further in the coming year or two. If I then just go on to how does that look in terms of a financial result, you can see there, this is the group results half on half. So the first half of 24 to the first half of 25. And the revenue was up strongly, a 33% growth in revenue. That led to the EBITDA up 43%, as I said, from 9 million EBITDA in the first half of 24 to 12.9 million in first half of 25. In terms of on the expense side, one thing I just want to draw your attention to is the most significant increase in expenses, and our expenses will grow because our revenue is growing strongly. Our expenses do have to grow in order to accommodate that growth in revenue to service the clients who are coming on board and driving that growth in revenue. But the area where we're investing most in terms of an increase cost of operating is in technology, information technology. And that's very deliberate because there's never been a better time to be investing in technology. At Praemium, we own our own technology from end to end. All of the platform services that we offer to the clients is built on our own technology. That's different from most of the rest of the market where they've built it on other suppliers' technology, whether they be international suppliers or domestic suppliers. Some of the suppliers to the market are people like FNZ and Iris, but there's many others too. Whereas end-to-end, we run our own tech. And the reason it's such an attractive time is because the development of generative AI in the market is giving us some wonderful opportunities to improve the functionality and the features of what we offer to the market, whilst also driving cost out of the rest of our business. So it's been a very deliberate decision to invest more in tech, but doing it in such a way that our EBITDA is still growing very strongly. If I then just give a bit of an outlook of where we're going, first of all, how do we view the market? This is how we view the market. I talked before about the retail market as a big focus for a lot of the platforms that we compete with. That makes up about $1 trillion of the market. But the overall high net worth market is over $3 trillion, closer to $3.5 trillion actually. Some of that is held on platform, but a lot of it is not on platform. So on that Venn diagram, the high net worth segment is our primary focus. And a lot of that money is held on platform, but a lot of it's off platform. And we offer both. We offer a comprehensive service that covers high net worth clients' assets, whether they be on the platform custody market or whether they be non-custody assets. And because we offer both, we're able to give the high net worth client and their advisors a whole of wealth view, which is not something that others can offer. If I then talk about how do we do that, we've got 4 key products in our range. Spectrum is our latest and key product now in the market, which offers a whole of wealth service, whether custody or non-custody. We also offer a managed account solution as a scheme, which is the SMA scheme. And then we've got 2 non-custody solutions. Scope, which is just software as a service for advisors who want to run the back office themselves, or Scope Plus, which is not only do we offer the software as a service, but we do the full administration on it. I'm just going to go back to the results to just draw out on the revenue side. The way you can distinguish that is the revenue came in at 51.4 million in the last half year, right at the top there. 40.9 million of that revenue was driven by our platform or custody offering. 10.5 million was that Scope and Scope Plus, the non-custody services that we offer, software as a service or administration as a service. So clearly the platform is more remunerative and more profitable for us, but the non-custody scope and Scope Plus is very important to give that whole of wealth view that I've talked about. And often what we do is by having the Scope or Scope Plus service, we're in the prime position to win the custody or platform business when that's on offer. So where do we look to going forward? We want to realise the benefits of that full product range now and continue to realise the potential of what we believe is the best overall platform and administration service for high net worth advisors. Further develop our leadership position across the full spectrum of assets, particularly alternative assets, which are so important in the high net worth portfolios. We have recently repriced our Scope software as a service, and so we expect to benefit from some tailwinds on the revenue side there. Finish the integration of OneView, which is, as I said earlier, proceeding on track, but with very significant synergies when we complete that integration. We're keen to close it out now. And as we continue to grow, realise the benefits of the greater scale in two ways. One is the greater scale gives us the opportunity to continue to invest in our technology, which, as I say, it's a wonderful time to have your own technology now and reap the benefits that are coming from AI and machine learning. But also, as we get greater scale, we expect a lot of that increased revenue to drop to the bottom line because we should be able to grow our revenue at a faster rate than our expenses. So once again, thank you very much for your attention and appreciate your interest in the company.